Ladies and gentlemen, good day and welcome to Gulshan Polyols Ltd Q4 and FY’25 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Aditi Pasari, Joint Managing Director. Thank you, and over to you, ma'am.
Good morning, everyone. Welcome to the call, and thank you for joining us today. Gulshan Polyols is one of the largest producers of green ethanol and specialty chemicals in the country, having 9 plants pan-India. Today, I would like to start with a brief of the financial highlights of year-on-year. So from last year, our revenue grew by 47% to 2,020 crores, driven primarily by increased capacities within the ethanol segment. The EBITDA rose 64% to 100 crores, despite being partially impacted by underperformance in the grain segment. The PAT increased 39% to 25 crores, trailing revenue growth due to full depreciation of newly commissioned capacities within the current financial year. I would also like to add that the 500 KLPD Madhya Pradesh plant is eligible for an additional incentive of 1.5 rupees per litre, which is effective from its date of commissioning, which is 1st July 2023, and they have already got the approval from the government. So we are hopeful that we should be receiving incentives soon. These incentives are not yet reflected in the current financials. I would also like to add that on our 250 KLPD Assam plant, we have received an additional incentive of 2 rupees per litre starting 18th of May 2025, which is the date of MOU signing. This is over and above the other state incentives under the EPA scheme of 2021. Other segmental highlights I would like to add that we have seen a record performance in the ethanol segment, which is driven by successful capacity utilization, and sales were about 14 crore a litre, which almost led to an increase of more than 100% year-on-year. We expect to continue to ramp up the capacities and increase sales volume, as we are still far from the optimal levels, while expanding the profitability of the segment. Grain segment was impacted by geopolitical disruptions and global realignments. We have 3 divisions under grain segment: sorbitol, starch, and fructose. Fructose and sorbitol are currently back to profitability, while starch is a problem point. Currently, we have begun a process of production upgradation to innovation to address the problem with starch division. Our mineral segment delivers stable performance with consistent operations. We expect to do well going ahead. Now, I would like to open the forum to address any questions or queries on the company.
Thank you very much, ma'am. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. I would like to remind every participant, if you wish to ask any question, you may press star and 1. We have our first question from the line of Deepak Ajmera from IGE India. Please go ahead.
Yeah, hi. Arpit Sabaria this side.
Yeah, hi, Deepak.
Am I audible?
Yes, very much.
Yeah. So, what has been the primary reason for losses into starch?
Starch, we are being hit by overcapacities in the country. So you see, pre-COVID, China had stopped exporting starch to the other countries, which gave India a huge opportunity to expand its capacities and export to the world. Almost 1 lakh tons of starch is being exported out of the country, and just recently, China has again started exporting starch to the world, which has led to competition for the Indian starch industry and uncompetitiveness because the maize price in India is higher than the rest of the world. So that's why, because of uncompetitive pricing, now the entire production of which was being initially exported is being dumped into the domestic market, which is leading to over capacities built up. So and hence we're unable to get the desired selling price for starch.
So what is the course of action which we are taking to improve the margin?
We are working on it, and we are also looking at how we can go for more value-added products in this segment. So it's in process, and we are working towards this segment going forward. It is a problem point, and we are aware about it. And now going forward, we are looking at seeing how we can improve. Maybe we need to do some kind of value addition in the current product. So and also improve our backward cost expenses. So we are working on every level and seeing how we can improve this going forward.
How much time it will take to turn profitable?
Well, it's really difficult to say how much time it is because we are being hit by overcapacity and more of geopolitical issues here. So definitely we are exploring different ways of how we can curb these losses which are coming in the starch segment.
Can we temporarily shut down the current facility to reduce the losses? Is that an option or it is not an option?
Well, of course the option is there, but right now we are not making any statement regarding shutdown, but we are exploring different ways of how to tackle the situation.
Got it. And what has been the primary reason for 140 crore rise in inventory levels?
Yes, because we were sitting on a lot of stock of ethanol in our NP and Assam plant, which was unable to be dispatched because we were not getting the indents from OMCs. There was, these 3-4 months, OMCs receive ethanol from grain as well as sugar. So therefore, they tend to have oversupply. So this is a problem you will be seeing year on year now going forward, that we will be sitting on inventory in the end of March. Because February, March, April, these are the peak times of supply coming from sugar as well as the grain ethanol segment. We were sitting on large inventory. We were unable to dispatch because we did not get the indents from the OMCs. But this problem will ease out in July, August, because that's when the sugar year comes to an end, and the entire focus of the OMCs is only procuring ethanol from the grain industry. So going forward, I feel this could be a recurring issue in March end. Yeah.
So is that the statement correct if I say by September it will get normalized and by March it will get again rise?
Absolutely. Yeah, we will have a off-peak and on-peak for the dispatches. So this will get, I see this happening year over year now, going forward.
Got it. And what is the per liter margin we are making over ethanol right now?
On average, I would say about 4 to 5 rupees per liter on EBITDA level.
Can you provide it differently for rice and maize?
You would like me to give the costing?
Either way, it works for me.
See, there is a different yields. The yield factor is different for maize as well as for rice, and even the pricing points are different for both of them. So when I tell you about maize, I can explain the whole costing to you. It is actually quite transparent and openly spoken about. So when I say that maize has a consumption ratio of about 2.7, 2.6. So if maize today is available at 24 rupees, so the cost of maize on ethanol is 24 into 2.6, which is about 62.4 rupees. And we have additional cost of 11 to 12 rupees, which includes power, fuel, admin, and chemicals and other costs. So that's how the costing is derived.
Got it.
And when it comes to rice, for rice, the ratio is 2.23. The rice to ethanol ratio is 2.23. So if price is available at 25 rupees, then we can just calculate into 2.23 and get the basic costing.
Got it. So what is EBITDA per liter into rice and EBITDA per liter into maize right now?
See, it all depends on. It all depends on the availability of rice and maize and at what price it's available. So it is not really a choice we make. It depends which month we are getting rice at what price and maize at what price. So it is really governed by market dynamics, and depending on the availability, we have to make a choice between which raw material we want to use. The EBITDA will change every month because our raw material is dynamic. It is changing every month. It is very seasonal. So today I'm getting 4 to 5 rupees. It does not mean I will be getting 4 to 5 rupees in the entire year. I could also be getting 7 to 8 rupees, or maybe I am getting 1 rupee. So when I say it is an average figure, every month it is different depending on the price of the raw material.
What capacity utilization we are there on ethanol?
Currently we are at about, if I see the entire ES5 tender which we have taken for both the plants, it is about 70% of the capacity. And going forward, we should be looking at touching 80 to 90% very soon in the coming year.
Okay. What is the volume of production into this quarter?
In terms of liter?
Yeah.
Yeah, so it is about 5 crore liter per quarter.
5 crore liter. Okay. Okay, we will call back in the queue. Thank you for answering patiently.
Thank you.
Thank you. We have our next question from the line of Bala Murli from Oman Investment Advisors. Please go ahead.
Hello.
Mr. Bala, are you there?
Yes, sir.
Yeah, please go ahead with the questions.
Yeah, sorry, I missed that opening remarks. Could you please throw some light on the current realization of the maize and how we are running the plant, either what kind of percentage is from maize and what is the percentage of FCI rice?
Well, major production is coming from maize in both our plants. We have major allocation from maize. So almost if I see collectively, it is about 65 to 70% is maize. And about 10% to 15% FCI rice, and balance is the DFG.
Okay, so we are expecting this FCI rice. Actually, in the previous conference call, you told that we have received the FCI rice, so we are going to use it in a good quantity. So, but why we are limited to this 10 to 15% only? Could you please? And the maize price is missing. Can you please?
Yes, actually, the FCI has started. So FCI has started giving rice to the ethanol industry, and they started from the month of March. So currently, FCI is giving us rice at 22.50x go down. So it is to us the cost of FCI rice is about 23 to 23.50. But we still have not got the correct selling price for FCI rice. They have not corrected beyond 58.50, which was the price when the FCI rice is available to us at 20 rupees. So this whole difference of 2.5 rupees, whose net impact per liter of ethanol is almost 5.5 rupees, has yet not been corrected by the government, which we are working towards them. So however, but this has definitely eased off the pressure on raw material which was created. Because even if 10 to 15% of the ethanol industry starts buying FCI rice, it definitely has eased off the pressure on the raw material. That's why we have limited to almost this much until this price correction comes through, then we will be able to increase this further.
Okay, and that maize average realized price of purchase, can you please share that one? What is the
I'm sorry, I don't understand. Can you repeat?
No, maize purchase price. What is the average purchasing price of maize per kg?
Average purchasing price, if I talk about the whole year.
No, but
See, again, I just said. Okay, recently it's about In Assam, we are getting for about 23 rupees, and in Madhya Pradesh for about 23 rupees 50 paisa.
Okay. Okay. What is the limiting us to increase the capacity utilization? So the MP plant is running at 70-60%. It's a long time. Usually, when you come to or when you see the competitors, so they are ramping up quickly in 1 or 2 months of the commercialization of the production. So what lagging here to increase the capacity utilization? Could you please throw some light on that?
It is usual teething issues which the plant goes through, and the plant is very much capable of producing 100%, but to achieve 100% day on day is yet not being a possibility. We do have breakdowns, we do have malfunctions, so because of which we are missing out on some 100% working days or 100% running days of the plant. But going forward, we are working towards improving the efficiency and correcting the processes.
Okay. So this on the benefits from the state government and the PLI. So whether in the FY’25 have you accounted anything in our numbers, or it will reflect in the FY’26 only? If it is reflected in FY’26, what could be the approximate benefits we will receive from the both plants for both plants?
It will reflect only after it has been received. We will not be taking any provisions until we have received these incentives from the government.
So what would be the average amount expecting per year from both governments, so Assam and MP and PLI benefits, everything there? On a consolidated basis, how much we can expect?
Yeah, on Madhya Pradesh, it's about 1.5 rupees per liter. So if I say that we are producing about 12 crore liter in the year, so that will be about 18 crores per year. It will be the incentive which we should receive from the government year on year for 7 years. And for Assam, we have got a PLI of 2 rupees in addition to some other incentives, state incentives and central incentives, which altogether account for about 3 rupees a liter. So on average, if we are producing about 6 crore liter in the year, then we should be looking at about 18 crores from there as well.
So overall, approximately we can say, and I think recently we also received more benefits from the Madhya Pradesh government. So on an average, we can say around 40 crores we can expect from these benefits, right?
Well, we do expect, but everything takes time. It has been taking time. It's not so easy to get these incentives from the government. It is a slow procedure. But yes, we have recently got the approval for our claim from MP government. So we are hopeful we should receive this soon in this financial year for sure.
Yeah. And on other segments, you see that other segments are posting losses. So it is a very commoditized business. So there are a lot of up and downs. So do you have any plans to discontinue those business or make it ethanol as a primary business, or so separate those businesses? And what kind of top line or bottom line you are expecting for FY’26?
Green ethanol grain segment has been our legacy business, our core business for more than 25 years now. However, last 2 years has been very challenging for that segment. It is mainly the starch business which is being the pain point for the company right now. The sorbitol and fructose business are still in profit, but it is the starch business which is pulling it down. I mentioned earlier on the call as well, it is mostly due to overcapacities which have been built up in the country, and some export of starch from China which has started in the last few months, which has again hit the Indian market, and a lot of overcapacities which were designed for exports are being dumped into the Indian market. Hence, we are not getting the desired selling price of starch, and hence we are incurring these losses. But of course, we are aware of this pain point, and we are looking at options whether we go towards more high value added starch, we make some modifications in the current product, or so we are working on it. Yes, we are working very actively on it. It is a pain point.
Yeah, and any guidance on this revenue and margin perspective for FY’26?
From the grain segment as a whole, we hope to continue our existing revenue. The revenue should be stable as it was in the current year.
So we may expect a little bit incremental business. Then we are not expecting any capacity utilization to improve from here onwards, because we are expecting around 1850 something from the ethanol sale itself, when we are planned that commissions. So now we are also around, I think, 2100 only. So I think there is some more room is available for improvement. And what kind of margins you are looking at in this year? So last year we have a lot of up and downs due to raw material inflation and the maize price also. So now I think the prices are a little bit cooled off and also FCI rice is available. But so maybe we are expecting say ethanol price to also get revised. So what kind of margins we can expect in this year?
So definitely last year was a very challenging year for the industry as a whole, including the company, because there was a lot of pressure on the raw material. And it was a lot of effort with the government that we had to request them to release some portion of FCI rice to ease off the pressure on the industry, which has happened now in the last couple of months. The FCI rice has got released only in the month of March to the ethanol industry. So yes, definitely some ease off is already showing in our current quarter. Well, if I talk about the ethanol industry, I feel that we should be looking at an EBITDA of about 9 to 10% going forward in this year.
Okay, good, that is that. And lastly, I'm very much thankful to your father for representing this entire ethanol grain-based ethanol industry with the government and getting this FCI sanctioned. So going forward also we are looking for his active participation and involvement in industry to get some better benefits to the industry from the government. Thanks a lot. Convey my regards to him. Thank you.
Yes, I will. Dr. Jain has worked tirelessly day and night. He has been liaising the government to benefit the company as well as the industry and to get some relief. So he has been totally dedicated to this job. Yeah.
Thank you very much. That's all from my side.
Yeah, sure.
Thank you. We have our next question from the line of Sanjay Manyal from DAM Capital. Please go ahead.
Hello, ma'am. I have a few questions regarding the total volumes what we can do in FY'26, specifically from maize and rice ethanol, if you can sort of elaborate that.
Well, it is very difficult to say, but anyways, FY'26 also gets covered in the ESY 25-26, which already is published in public domain. So where we have taken an average allocation, if I say between both the plants, about maize is about 65%, and we have taken about 10% FCI and balance from DFG. So almost 6 months of the FY'26 has already been covered in ESY 25-26. So, and balance here, when we come to October, we will see how the market dynamics are, how it is turning out, how the FCI is turning out, how maize prices are turning out. So depending on all, we'll be giving in a fresh tender in the month of October for the balance of this year.
But we have
it all depends on the price of the raw material, availability of the raw material. So it is very, very dynamic.
Yeah, but we have the capacity, I believe, to serve almost 25-26 crores, if I'm not wrong.
Yes, that's right. We do have, yes.
Okay. So what I heard between that there were maize prices in Bihar specifically have been approximately 22 rupees or low. So is it possible for us to procure from Bihar, or means we will only be procuring in MP, which is
No, you're absolutely correct. When they say Bihar is 22 rupees, that's the mandi price at 22.
Okay.
So deliver to our plant will be plus.
Okay.
Yeah.
But then what is the landed price in MP? You mentioned 23.5.
Yeah, so that is 23.5. Bihar is not viable for MP right now. The cost will be not less than 2.5 rupees on top. So right now we are buying from MP and Maharashtra only. That is more viable for the MP plant. This is the current situation. Again, I see every day the situation is different. So today I'm talking of today.
But
And
you
for
have some
Assam
sense
plant,
about
right
the...
now, Assam has its own crop which comes for 3 months, April, May, June. So we are buying the local Assam crop right now.
Okay. But you have some sense about the overall production in the country is, what I understand is broadly 40 million tons for maize. Is it, means are we seeing a direction where, the supply of maize will be increasing next year as well, and probably the price will remain at a lower end?
100% there will be increase in maize cultivation because a lot of focus is happening in that area from the government, from the ethanol industry, and also from the seed companies. They're actually all working hand in hand. We are doing workshops and seminars and educating the farmers and also distributing free seeds in areas around our own factories. Like in Assam and MP, we have conducted so many workshops with the farmers along with IIMR, which is Indian Institute Maize Research, and Corteva, which is a seed company. We have conducted so many workshops to encourage the farmers, educate the farmers, and there is a big jump in maize cultivation already. So the whole scenario of maize is going to turn around in the next 2 years. So we are very, very positive on this. And another thing I would like to add, like when we were putting up our plant 2-3 years back, and we had gone to the market for a fundraise. So, the first question all the investors would ask us is that, where is the grain in the country? Like, how will you get so much grain? And very fortunately, to our delight, I would love to add that India achieved 18.5% blending from its own grain. No plant ever shut down because non-availability of grain. That is different. We bought grain at a high price, but our plants never shut down because non-availability of grain. And it is a delight that what our country is capable of. The amount of grain we had required to achieve this kind of blending target was unimaginable. So yeah, I'm very delighted actually with the whole agroscape of the country and the capability and potential of the country. So going forward, it is just going to get better.
Okay. Also, if you can just elaborate some bit on the power cost. So you mentioned 11-12 rupees is overhead expense or conversion cost. So if you can just distinguish between the power and the other conversion cost.
Well, I will just give you briefly about power is about 6 rupees. I'm talking as an industry average. 5 to 6 rupees is power. Then we have chemicals, which is 2 rupees. We have admin salary about 2 rupees. And other expenses would be another 1 to 2 rupees.
Okay. One more thing on the DDGS. So if you can just elaborate something about the economics of DDGS, what is the extraction input-output from, say, 1 kg of maize, or if it is different from rice, and what is the generally price, at this point now it is hovering around what price, and is it really very fluctuating over the year?
Well, it is not fluctuating since 6 months. There is been stability in the price, but the prices have definitely stabilized at a very, very low level, which is very unfortunate. Today, rice DDGS is selling at about 17-18 rupees, which 2 years back was at 30-32 rupees. And maize DDGS is selling at about 15 rupees a kg, So they have kind of consolidated at these rates. So we are seeing these rates prevailing for almost last 6 months. So which are very low. Consolidation has happened, but yeah, unfortunately, consolidation has happened at very low rates. And if I talk about their yields, on 1 kg of rice, we get about 17% of DDGS, and 1 kg of maize, we get about 25% of DDGS.
Okay.
Yeah.
And I think you are holding very large amount of inventory. So can we say that is it because of in the season you procured maize and then probably you will utilize it for next 2 quarters, or you have sufficient amount of maize or sort of raw material for next 2 quarters, so price won't fluctuate?
No, actually actually cement is also a lot to do with the finished goods. So in the month of March, we were holding large volumes of ethanol in our MP plant and Assam plant because we were not getting the dispatch schedules from OMCs, the indents from OMCs. And I also explained this earlier in this call that this could be a year-on-year phenomena because these 3-4 months, February, March, April, May, these are 4 months are the peak season for OMCs to receive ethanol from grain industry as well as sugar industry. So there tends to be a lot of queuing up. So Indians tend to slow down. But after June, their entire focus is only on the grain because only grain is able to supply ethanol to them post these 4 months. So we could expect that, this could happen year on year. We could be sitting on inventories now going forward in this time.
Okay. No, I'm just worried about the fact that post-June, if you will be procuring maize, then you might just procure at a higher price because the season is off. Am I right over here?
No. It changes for every plant. Like April, May, June, right now it is season time for Assam, so we are procuring raw materials. We are sitting on stocks. But for MP, it is the Kharif, which is in October, November. So we will be procuring that time.
Okay. And just one last question on the subsidy part. So from when you will start receiving the money in MP and Assam, from which if you have some sense on that?
Well, recently we have got a notification that our claim of our PLI claim on the MP plant has been acknowledged by the government and has been, so we are hoping that very soon we should be getting some amount or maybe a substantial amount actually on the MP plant. And also we are also expecting to get additional incentives from the needs policy very soon in the next 2 to 3 months. So I think these 2 incentives should be coming our way very soon.
Okay. Perfect. I think that's maybe if I can just lastly ask about the grain processing. Means you have a loss in that business, that segment. Is it going to take longer time to sort of recover, or are we really? Do we have some visibility that we'll go back to the previous historic margin levels, or it will take some time to sort of recover in that?
No, we will have to do some kind of, change in the product portfolio in the grain segment. So, these are all old products and, we are seeing that they are coming towards the end of their product cycle in terms of profitability because of overcapacity which have got built up in the country. So now going forward, the focus will shift on the grain segment for us as a company. And we will be, revamping the products, maybe introducing some more high value added products or modifying the current products to get us better realization. Because current products are really getting hit by overcapacity in the country. So now the focus is going to be on the grain segment in this coming times.
Okay, perfect. Thank you very much for all the answers.
Thank you. We have our next question from the line of Harsh Mehta from Perpetual Capital Advisors. Please go ahead.
Hello, can you hear me?
Yes,
yeah, hi.
Hi, so congratulations on the great set of numbers. I just wanted to understand how are the prices of the derivatives like sorbitol, etc., derived from maize?
Well, for these, we don't have a clear pricing formula like the way we have for ethanol.
Ethanol, right.
Yeah, it is not as clear and transparent as that. But if I will just tell you the basic yields, for sorbitol, it's about 1.3 kgs of maize is required to produce a liter of sorbitol, and for starch is about 1.6. The raw material to finished product ratio is about 1.6 for starch and 1.3 for sorbitol.
Right. Okay. And what are the margin difference when you're manufacturing, say, starch and sorbitol? What are the EBITDA margins for starch and sorbitol?
We like to give our margins as a consolidated margins, not product-wise. So I would like to stick to the consolidated margins in the segment, in this segment. But anyways, the last couple of years, last few quarters, of course, these margins have been hit. If you see traditionally, this is a legacy business. Sorbitol was our revenue spinner as well as the profitability spinner for the company. And but yeah, in last couple of years, this segment has got hit by overcapacities in the country, and the margins have been hit. At one time, we have enjoyed 17-18% EBITDA margins also on this segment. But unfortunately, it is now being hit. And as I said, that we would be requiring to churn this segment by adding more high value-added products or maybe reducing production of some loss-making products. Yeah.
I just wanted to understand if the main reason behind the loss in EBITDA margin is rise in prices of maize, or is there an increase in competition also which has led to the drop in margins?
See, it is both actually. Even the maize price, which is at average of 24 to 25 rupees a kg, if I see the whole year average. So if I talk about starch, so at that price, at a price of 25 rupees for maize, the starch should be priced at 40 rupees a kg, which currently we're not getting more than 32 rupees a kg. So there is a huge difference in the cost over there. And secondly, because of overcapacities in the country, we are unable to push this price to a desired price, And also secondly, because of exports in China, which has recently opened up for starch, there's only so much pushing that can happen, because after a certain price, it is getting unviable. It's not getting exported. And today, the price of maize is highest in India as compared to any part of the world. Maize is most expensive in India. That's why exports are getting unviable.
Okay. I just wanted to understand. So, do you guys export to the foreign markets or no?
We export sorbitol.
So, I read somewhere that if you are exporting value-added products, say like sorbitol, you can import maize duty-free or something. Is this right?
Correct. Yeah, we have done that also. We have done that in our company.
So, shouldn't this have benefited you, like compared to the other competitors which you have in the same segment?
So that is only possible in the case of sorbitol, because only sorbitol is getting exported, which is about 25,000 tons in a year we are exporting sorbitol. So to that tune, yes, we have imported raw materials from Ukraine, which has cost us about 22 rupees 50 paisa, including delivered to our factory. So it is definitely we have an advantage about 1 to 2 rupees than buying from the open market. So yes, we have taken that advantage, but that can be only limited to the amount that we are exporting, not more than that.
Right. Okay. Right. Okay. And the last question, what are the value-added products that you are looking at in the segment to add to the profitability and turn around this segment again?
I cannot name any products because yet we have not taken approvals from the board. So I will not be able to disclose anything, but we are working towards a few products.
And are you also looking to make new products, say for import substitutions and by fermenting maize and making up new products?
Yeah, of course, because that is our core business. That is our core competency. So always our priority is to look in, identify products which are import substitutes and not being manufactured in the country yet. So that is always our priority, and we are always looking at identifying such products and which have similar processes which are already similar to our current products. So definitely that is always our priority.
Right. Okay. That's it from my side. Thank you so much.
Thank you. We have our next question from the line of Sanjeev Damani from SKD Consulting. Please go ahead.
Good morning. Am I audible?
Yes, good morning, Sanjeev ji.
Ma'am, my first question is regarding the fact that on 18th you made one more announcement of certain incentives being given to us. So it is for the additional capacity that we are putting in Assam, or on the existing facility we are going to get more incentive. So can you explain this?
No, this was in continuation to the previous notification which we had given in December regarding the approval of 2 rupees PLI from the government. So in continuation with that, we had informed the stock exchange that we had signed the MOU, and this whole PLI has got formalized and legalized, and we had done an MOU exchange for the same.
Okay.
So it is in continuation with the previous notification.
Okay. So nothing additional we are going to get. I understand that way.
Yes. Yes.
Thank you. Second is that PLI is state-based as well as central-based also, or we are getting only support of this announcement through states only? That is Assam and MP both.
Yeah, both of these are state-based policies. We will be getting from the state.
We are not going to get anything as PLI from central government.
Not in the form of PLI from the central government, no.
But are we getting anything as incentive for making production of ethanol from central government? Are we?
Yes, we are getting ISS, which is interest subvention. That is coming from the central government. We get a 50% rebate on interest of term loan.
Right. That is what is known, but not linked to the production. There is no separate incentive to this, right?
No, there is not. No, nothing from the sector.
Okay. Now I am coming to one more question, that we have Assam plant as well as MP plant, and these two plants can run, I understand this way, that based on maize as well as rice, right? So is there any change time that we have to give? Suppose we are producing today ethanol based on maize, and if we are changing it to rice, so we have to stop production for some time, or it is a continuous process?
Just couple of hours.
That's all. Okay. So
That's
it's
all.
not a big cost.
It is not a big cost. No. We can change in couple of hours.
Okay. One request I want to make, that along with the quarterly results, if you can announce, because you have got tenders allocated of various rates from government, as we have seen in past, as you announced this, that you have got tenders at 71 rupees, 58 rupees, 65 rupees. If you can quarterly report that how much quantities have been sold against that, it will give us a better insight. And one more thing I want to ask today is how much money is still due till 31st March for the supplies already made to the OMC. So in the form of incentive, what amount approximate is pending to be received in this year, so that we can make a assessment of our strength in coming days? Can you kindly quantify that amount?
For MP plant, it is about 20 crores
Both.
up to 31st
20
March.
crores.
Yeah, I'm going turn by turn.
Okay.
For MP plant, it is about 20 crores up to 31st March. And for a SAM plant, we are expecting about 5 crores from the needs.
So this is the total amount which is due up to 31st March.
Yes.
Not quarter-wise. For whatever production we have made till from the date of commencement of the plant, this 25 crore is only due to us, which will be coming.
It is due immediately. Yes, which is overdue actually. Yeah.
Which will be it's overdue and due to us. And can I know that in the closing stock, at what price and how much closing stock on 31st March we are carrying of ethanol, and at what price we have measured it, valued it?
Yeah. I would like Rajiv Gupta ji, who is our CFO, to intervene here. Rajiv ji, do you have the breakup of the valuation of the closing stock?
Hello. No problem. Hello, ma'am.
No. Rajiv ji, can you give this breakup?
In fact, I want that, if all this information is published, then, we can always get our assessment correct.
Hello.
One more.
Yes, Rajiv, sir. We can hear you now.
Yeah. See, if you want what kind of your query is that was about the stock, closing stock of ethanol you're talking about. Valuation is different depending. See, valuation, we cannot make a valuation of closing stock or something like that. Closing stock for finished goods is valued at different prices because, as already Aditi has said, we do our production based on either through maize or either through rice. So
Right, sir.
perhaps that valuation of closing stock is means average of both of them. It cannot be that we can give you we can value that total, what is the value of the closing stock we can give it to you, but what price, it can be overall price, upon the quantity, on the basis of the quantity.
Okay.
Yeah.
So total quantity we know as on 31st March, and then we apply average rate to value.
Yeah. That is the only solution.
Right.
Yeah. We cannot give you
No
breakup
problem, sir.
Yeah.
I just wanted to know the mechanism.
Mechanism is that only, sir.
Sir, can you quantify how much closing stock we are carrying on 31st March? Ethanol stock.
Yeah, there are different, see, ethanol-wise, for our Assam plant, the closing stock, just like I will tell you, I am talking about the finished stock.
I'm talking about the finished product only. Yes, sir.
Yeah, I will
Finished
just
all which can be dispatched, not in the process.
Just give me, because I have to check, because we have
No problem, sir.
consolidated result which is to be expected.
From you. Sir,
Yeah, you can do that. That is a better way of doing it, because I have to see all my results. I have to check my results. I have to just...
Whenever I approach for my queries, I have got answers from you. So thank you very much, and I really...
You can come down to me anytime. Yeah.
You are all very kind, sir, that way. So all the best to all of you. And I really look forward that OMC comes forward and lifts our material faster so that we can save on our interest cost, which is very high these days. I mean, we have paid almost 28 crores of rupees as interest. So perhaps because of the stocking of the raw material as well as finished stock. So all the best, sir. Thank you.
Yes.
Thank you.
Thank you.
Yeah, thank you.
Thank you. We have our next question from the line of Shaurya Panyani from Arjo Partners. Please go ahead.
Hi, am I audible?
Yes, Shaurya.
Ma'am, you said that in your grain segment, you are expecting a flat revenue year on year. So what about the other two segments like ethanol and minerals? What kind of growth are we expecting?
Going forward, we have already, like in this current year, we have already crossed 2,000 crore mark. And we are of course looking forward to further ramp up our ethanol capacities, take it to about 80 to 90% capacity utilization. So putting that in place, we are confident that we should be looking at about 2,300 to 2,400 kind of a top line going forward.
And what kind of margins on that are we expecting? At the current margins, or we are expecting some improvement?
See, again, these are all forward-looking statements. We, of course, these are our targets, and we're working towards the targets. There are no promises anywhere, I would like to put a disclaimer there. So, of course, we're all working towards 100% capacity utilization. So, going forward, we are very hopeful that there will be improvement in the ethanol segment. And as I also said earlier, we are hopeful that we should be looking at about 9 to 10% EBITDA average for the whole year.
And what is our current capacity utilization for ethanol, like on a blended basis?
About 70%.
70%, which means we are targeting getting to 90 this year, right?
Definitely we are targeting.
Okay, ma'am. Thank you so much.
Thank you. Ladies and gentlemen, that would be the last question for today. And on behalf of Gulshan Polyols Ltd, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.